Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast, where our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is industrial real estate expert and founder of Matador Capital, Jeremy Mercer. Now, Matador Capital is a private equity firm that focuses on industrial warehouses, manufacturing facilities, flex space, service-based industry sectors, lending on commercial real estate assets, and land acquisition within intermixing of multifamily and retail property sectors throughout greater Texas. And so, guys, with that, it's my honor to welcome my guest for today's show, Jeremy Mercer. Jeremy, how you doing today, my friend?
I'm good, Kevin. How you doing? Thank you.
I'm excited to have you here. Excited to talk about real estate, more specifically industrial real estate, which is, it's funny. I joke that, we're in the manufactured housing space. 10 years ago, no one would consider that, like, it was just kind of snub your nose. Like, none of the institutional capital, none of the private equity firms would will really consider, the nitty grittiness of our industry. There's some class A stuff, but the majority of it, it's kind of the nitty gritty. Now everyone's trying to throw their capital at it, and we've got big institutional investors that we're battling against to find deals. I feel like industrial is very similar. It's 10, 15, 20 years ago, unless it was a brand new class A, flex space or distribution center. There wasn't a lot of private equity and institutional capital chasing it, but times have changed, haven't they? In fact, it's become the darling of the commercial real estate world. Industrial has, and so times have definitely changed over the last decade. And so I'm excited to have this conversation with you, understand your business model. We'll take a peek under the hood, understand what you guys are doing, how you're adding value, how you're finding deals, how you're adding value to them, and ultimately what the long-term strategy is. But before we go down that road, Jeremy, if you would, for those that are listening that aren't familiar with you or your firm, maybe take a few minutes, tell us a little bit more about yourself, your background, and how you found your way into this niche of real estate.
Yeah. So, I in college, my degree was finance with a real estate emphasis. And, I went to Texas Tech out in Lubbock. So that's kind of where the Matador reference comes from, if anyone knows that. But out of college, I kind of did, worked. My dad had a steel company. I worked there for a bit, but my brother had gotten into commercial real estate and took a job at a brokerage here in Dallas, Fort Worth. And at that time, my brother started kind of buying some buildings and these industrial assets kind of in the Stemmons corridor of Dallas, right through up into downtown and the design district and stuff. And I had actually stumbled upon a rehearsal studio for bands that I was actually a tenant at, and I ended up having the opportunity to buy the business, and I got my brother to buy the building. So I was kind of in property management at about 24, managing about 50 bands in a 20,000 foot industrial building. So it was a pretty interesting time, and we still own that asset today. It's just kind of like it's a pretty fun little thing. But at that point, my brother had started buying a bunch of buildings, and my brother and I have always kind of worked together. And he was like, "Hey, do you want to start managing these buildings for me?" And I was like, "Sure, it's more income for me." So I started doing commercial property management at about 24 years old. And I was managing about 250,000 feet and about 30 tenants just right there in my little ecosystem of Dallas. And while I was managing my rehearsal studios, and then probably about 6 years later, kind of got burnt out on the management end. And my brother had left his company to start the Mercer company, which is our brokerage. And he said, "Hey man, you should come broker with me if you're done with property management." So, man, I hit the ground running pretty hard in 2010 brokering. I was the Dallas Business Journal Rookie of the Year my first year, and I just came out the gates, man, just living on the street, trying to find deals,
Nice.
and in 2010, like you were saying, man, you couldn't give industrial buildings away. I mean, I'd give people a 10 cap, and they'd be like, "Well, that's not that good," And then, I brokered really hard, and we would always buy a building here and there as we go along. Opportunities arise, and as again, my brother was buying buildings, so we started buying more buildings together. But you're right. I'd say about 2016, 2017, man, my phone just starts getting called all the time. "Jeremy, we've raised $1 billion to buy urban infill, last mile, cool. All these great buzzwords just came out of nowhere. And, my market in Dallas is called Brook Hollow. And I mean, it is, Trammell Crow built the industrial park there, and it's, these are buildings from the 1950s, and I mean, it's just like there was a line of these guys out the door to start buying these buildings. So, I was like, okay, great. Well, there's all these people that want to buy all this real estate all of a sudden. So, I'm like, making commissions, and so I'm making a great living doing this for a while, but then I'm just looking at what I'm doing. I'm putting all these deals together. I'm backfilling them with tenants before we even close. And I was just like, man, I just made this guy a ton of money. I made a great fee. Don't get me wrong, but I was like, it's, I think that
fee's not reoccurring. You got to go back to work again the next day, right?
Yeah. So that was the deal. And so I didn't really understand how private equity worked, right? I'd never really worked where, there was all that, where there was, a true syndication type model. It was just, so I spent a lot of time with one private equity company. I built a big portfolio with them, and they let me invest in the sponsor level of everything. And so we exited that portfolio last year and did really well. But at the same time, I said, hey, I'm gonna go do my own gig. So that's what I did. I started buying buildings and just really focusing on that. I still broker a little here and there, but really just client stuff, and I don't really take on any new assignments or anything.
So you've kind of made a complete shift then. I mean, the emphasis has shifted to the other side of the table where you're looking at it through the eyes of an investor versus the eyes of a broker, at least for the most part. And so with that being said, maybe let's take a look at the last year or two, and just maybe kind of give us an overview, just so we have a better understanding of your business model, what types of buildings that you're looking to buy or that you have bought, kind of where you see opportunity, what type of opportunity you're looking for, how you add value to it, and then what the long-term strategy might be. I looked on your website; it looks like there was a couple of deals that you've gone full cycle with recently, many others that you've acquired. Looks like you guys had a pretty busy 2021, and so. Again, bring us up to speed with the types of things you're working on today.
Yeah. So one kind, the market I worked in Dallas was as a broker, had a lot of properties that were like land component type trucking facilities, fleet maintenance facilities. And so, you're talking about a 15, 20,000 foot building on 5 acres. And I've really identified those as something to kind of go after, because people would always want me to get them a facility, and I always had to find one off market. They were never on the market. So I try to buy a lot of low coverage type buildings where I have some kind of outside storage component. And so we're chasing a lot of buildings like that. We're also just chasing, if there's something where we can add some value, so the ownership base and a lot of these assets we're chasing are pretty, they're kind of scattered, I guess. It's one-off business owners, local landlords, stuff like that. So, they don't really follow the real estate market a lot. We can kind of, they've made a lot of money in their building, and now that the prices have gone up so much, there's a lot. Their net worth is really in that building, so we can go in there and make them a good offer, and they're kind of like, oh, man, I don't even know if I want to do this business anymore. So that's where we're finding some opportunities.
In that scenario, would you typically be looking at doing like a sale leaseback arrangement, or I guess it's really dependent on if that business owner wants to continue operating their business? I mean, if they don't, then it's pretty straightforward. You buy the property, get it, re-tenanted with another business. But is the sale leaseback strategy also a component of your model?
It is, and we've done them. 9 times out of 10, though, a sale leaseback is usually a company that is having some kind of financial issue. And at least the ones I've seen, there could be some really good scenarios where they work, but for the most part, I see it's going to be there's a good chance that tenant defaults within 6 to 12 months. So, so sale leasebacks, they're okay. But but mainly it's going to be someone that's just, it's time to move on in life, and we'll get the facility from them, or small business might outgrow that facility and they need to go get a bigger one, and so we'll take down that facility for them, and maybe a broker in our brokerage office is helping them find a new building and they want to sell that building, and just sometimes it's they just want to get it over with, and it's like hey, this we can offer you this, or you can take it to market, you'll probably get a little more. And then sometimes they just want to be done, and so they're like, yeah, hey, you can just put under contract now and close. Yeah, we close. So that's usually part of the pitch too.
You had mentioned that you look for low coverage property, low coverage buildings that have a good amount of outdoor storage area. What's the reason for the large amount of outdoor storage area? What do you do with that?
Well, so I've just noticed that from a leasing standpoint, it is such a high desirable type property, especially in these urban settings, that it just leases immediately. And people need a lot of outside parking for trailer parking. They need equipment rental companies, construction's going through the roof. So every equipment rental company there is out there, just any kind of outside land component always shoots the price up. Plus it doesn't, it's hard to mess up land, right? It's, they're going to maybe move some dirt around and make some holes in it. But, from a CapEx perspective, whenever you're going to, fix up the property to re-tenant it, it wasn't a 250,000 foot facility that they messed up. It was 25,000 feet and 5 acres of land, So it's just kind of like getting the lease dirt out, but having that shop component with it. So
on your website, you have a case study, and maybe there's a more updated one other than this one, but is the Shepherd buildings. And
sure.
What I'd love for you to do, whether it's that particular case study or another case study of a deal you guys have done, just how you identified the opportunity. Was it just pounding the phones? Did it come to you? What was the opportunity that you saw there? What was the value add component that you could see that maybe someone else couldn't see? And then ultimately, how'd you execute on that plan?
So that was a really interesting building. A broker in our office brought it to me, and he said, "Hey man, this old lady owns this building. She's been on the market forever. And, I think she's ready to get it done." We made her an offer, and now the building had some real issues with it. It was 10 foot clear, which in the industrial world, man, that is just absolutely terrible on clear height. But I looked at it and I said, if I can get this building at the right price, I can overcome the clear height because it has a land component in the back, so I've got some kind of land to work with for an out, my thought is it could be an HVAC company with a fleet of vehicles that they need to park somewhere, or a plumbing company, or maybe an electrician, some kind of service provider that could use this, or an auto group, where clear height wasn't as much of an issue. So that was the one thing going forward, is I had a nice land component with it. Secondly, it was platted on one property, and it was 25,000 total feet, but it was a 14 and a 12,000 foot approximately square foot building, two buildings, and had a driveway in between them. And I was like, well, I could turn around and sell these and sell them to two separate users or one user by just doing a meets and bounds survey, because we can sell stuff on meets and bounds here in Dallas. Mm-hmm. So that's what I did. I went in there, I fixed them up. I ended up getting two separate users. And I knew that size of a user building was highly desirable because, just from a, kind of in the transition of brokerage, it was like I'd get calls to go buy someone a building like that, and I'm like, I can't even find one. You just can't find them anymore. And so I knew we would be able to exit the property at that. So we got in there, we fixed the building up, we put a new roof on them, we repainted them, cleaned them up, redid the offices, did some landscaping, and it was a great deal. We bought those buildings for $850, and we put $250,000 into them, and then we turned around and exited them at $2,025,000, and it was a great return for the LPs. And
So they had sat on the market for quite some time. You mentioned it. I mean, and sitting on the market in quite some time during a hot period of time where there was a lot of buyers. And I know that they had the challenges with the 10-foot clearance. But were they just overpriced? Were they mispriced?
Well, we actually purchased that asset in November of 2020. So they kind of had to go through a little COVID, in the beginning. But they just, I don't know. It's like she just didn't know how to make a deal forever, and kind of felt that the buildings were just worth more than they were, but they were just really dogs. I mean, it was funny. We had actually bought like a Caliber Collision around the same time, and that thing oversubscribed in 2 seconds, and I had to beg people to buy this building on Shepherd. And in the return on it, I was like, guys, I'm telling you, I've done this building 1,000 times. I've seen this. I've ran this lap. This has got some money in it. So, I mean, it took about a 4-month rehab on it, but I mean, I knew the value was there. So, but yeah, I think just a lot of people passed on it. I don't think her broker was too engaged in making a deal. Her broker was literally the scrapyard next door. So the broker for the seller was running a scrapyard next door while brokering real estate. So it was a very, unique situation. So anyways, I think it's just timing, I always say you must be present to win. So, timing happens if you show up all the time. Right. So
yeah, absolutely.
Yeah.
So how about purchasing existing versus new development? What's kind of your thoughts there? I'm looking again at the portfolio on your website. Looks like the majority of what you've done, at least from a personal investment side, has been an existing product. Is there a reason for that? Have you guys done new developments, ground up developments as well?
Yeah, I think the reason is we've never really been in that world. Never really focused on it. And we've created such a funnel for these types of assets. It's like, I think if I tried to do something like that, it'd be like a shiny object that I'm chasing that would
Sure.
it just made me lose my focus. And there's a lot of, development's incredible in Dallas, especially industrial right now. I mean, I think we have 40 something million square feet of industrial going up right now. It's insane. But and there's a lot of developers making money, but it's like, man, development's like having a child, right? It's like you go from being pregnant to having a baby it's a whole process, and we've just never been, I think it takes a lot of patient capital, which not that we're not patient, but we just don't have that much capital to be that patient.
Yeah, there's a different risk profile associated with it. So absolutely, it is a different type of capital, and I agree. I agree with you that it's a different business. It's a different business model. But I want to throw it out there and ask and just kind of get your thoughts on it. And so, what are you most excited about today? You mentioned you had a huge pipeline that you guys that you've been able to generate. I mean, I guess what are you doing outside of your brokerage to generate deals, or is that where the majority of your pipeline is derived from?
Well, our brokerage drives a lot of it. But man, I've had a really good reputation as a broker here in Dallas that I literally have a lot of my peers or competitors in the brokerage world now repping me on deals. It's I've always, in my experience in commercial real estate, it's always been a very close to the vest type industry. A lot of people don't kudos to you for doing what you do at this show, that you're sharing all this information and knowledge with everybody, because a lot of people just don't do that, and I think that's the abundance mindset versus scarcity. And I think I've sat down with all my competitors and said, hey guys, look, am I going to broker a deal against you? Probably, but it's always been a great experience. I've always had that great reputation. I said, look, I'm buying buildings now. You bring me something, I won't share it with anybody at our office. It'll stay with me, because I understand if I don't buy it, you need to try to go sell it to somebody else and make your fee. And I respect that, because that's how I've made my living. And, so bring me deals, and then you can participate with me too. So, and I'll show you everything I'm doing. And if you want to go do it on your own, great. And if you want to do it with me, awesome too. And I mean, it's been a great deal source. And I've gone to other markets too and just started, where my cold call used to be a business owner that owns a 30,000 foot warehouse. My cold call now is a broker, and let them make their fee and make their money. And, I focus on buying the asset. So.
And how big of a footprint do you guys have in the Dallas market? I mean, is it pretty wide, or is it fairly segregated to a few submarkets in Dallas?
No, we do have we pretty much have every industrial submarket covered with a broker. Fort Worth, we're a little light on. Fort Worth is kind of almost like a different town. It's almost like a different market to a degree. But we do own a lot of assets over there. We've got just about every industrial pocket in Dallas Fort Worth covered in a broker in there, and we got them covering about 50 to 60 million square feet of cold call area. And so, but in addition to that, I just pick up the phone and make a lot of cold calls too myself. That's how I've found some of my deals in Oklahoma City. And, I've worked some deals in Houston that way. And, that's just the brokerage mentality in me, just to make calls and find deals. And, the difference is I'm just going to buy it this time.
You had made a mention that a lot of these, the owners of these B and C class industrial centers or buildings, typically, let's classify them as mom and pop or whatever you want to call them, right? Like they're non-sophisticated business owners or investors, right? They don't keep up with the marketplace, and so. But with that being said, I felt very, very similarly about. So we're in the manufactured housing space. We have been for a decade, and up until about 5 years ago, it was very similar to that. I mean, owners wouldn't really keep a finger on the pulse of the industry and how things were changing and how there was a lot more interest. But over time, just over the last 5 years, lots of institutional capital has poured into the space. There's multiple new brokerage teams that have kind of spawned from some of the big brokerage houses, the CBREs, the Marks and Millichaps, Colliers, and those brokers have done a great job of obviously, as they're trying to get listings, of educating these mom and pop owners as to the value and demand for their product. And so, have you found that that's also been the case with the industrial space, or at least the type of buildings and assets you guys are going after, that maybe, compared to 5 years ago, that you're dealing with a much more educated building owner than what it had been historically?
Yeah, no, for sure. There's a lot more brokers out there bringing a lot of unsolicited offers. So, owners are seeing a market for their building, several offers at a time. And, sometimes it's about catching them before anyone else does. Sometimes it's about maybe offering some terms, some kind of solution. It's sometimes it's not all about the price, right? It's there's some kind of exit strategy for them. They need a year lease back, whereas, someone might have a tenant in tow that wants the building now. So people will still get educated, but real estate is real estate in my mind. I think people will always at some point have some, need some, or want to get rid of some, right? So, I'm trying to really brand myself for those types of assets to where, someone that wants to get rid of that thing, I'm the guy that wants it. And, and a lot of people just they don't want to go through the marketing process. It's not, you gotta run people through your facilities. People are very concerned about their employees seeing, all these people paraded through their warehouse, and, everybody starts asking questions. And so sometimes to them, it's more valuable just to get an off market deal done. So.
What impacts are you seeing, or do you see, with obviously interest rates are on an upward trajectory and they will continue that trend here, at least we know through the end of the year, multiple different adjustments in rates going upward. And so I guess let me back up a little bit. What's a typical debt that you guys are placing on? And I know there's probably a range, right, depending on the facility and the underlying lease and what have you, but are most of these 10-year term, or do some have a 5-year term with a reset thereafter? And I asked that question based upon, no one knows where interest rates are going and how high they're actually going to go. And so how are you guys mitigating that risk based on the debt you're putting on a property today versus ultimately what happens 5 years from now if you've got to find new debt, and might be 200 basis points higher than what it is today.
Yeah, and it's I mean, wow, this is like really all happened in the last 30 days, right?
I
Like
know.
I mean, I agreed to a term sheet yesterday, and they called me today and said they wouldn't honor it anymore and went up 100 basis points. And I
Oh
was
my
just like,
God.
okay, well that changes things, you know. I do feel that as long as your basis and the assets is right, you know, these interest rate moves will affect your yield, but you still should be buying the real estate right. And I think you can kind of still overcome some of these rate hikes because of that. But you know, typical terms that we would get would be usually a 5-year term, 25-year amortization. You know, we'll lever anywhere between 65 to 80% on the property. And, you know, usually looking at a half a point to a point origination. And, you know, I was getting rates. I mean, at the end of the year, I was getting 3.5 for 5, 3.75 for 5. And, you know, today it's like 5.1, 5.2. Like, you know, I was like, didn't they just raise rates 25 bips and everybody's taking a point out of it? I don't, you know, I'm trying to figure out the math.
Yeah, I haven't figured out either. No, it's an interesting point. And so, speaking to, you know, again, just mitigation of risk. Lots of these. Have you guys have you made adjustments? And I'm not overly privy on. I'm not an expert on the lease side of things as it relates to your industry. That is, and so. How are you mitigating, you know, inflationary risk? Are there changes to how the actual language is as far as annual escalators? Is it tied to CPI versus just a fixed percentage each year? I mean, how do you mitigate that risk from not falling too far behind the marketplace as we have this runaway inflation?
You know what was interesting? Last year we did a study. And we told every tenant to sign a 10-year lease, and we told every landlord to sign a 1-year lease. And that's because the rents are escalating at just this incredible rate. And we're usually tying an escalator to it. And for years, the market's been about 3% annual increases. I'm seeing 4 and 5 now, but I mean, I still don't think that accounts for it. So it's, but it's the market, right? So, you know, I kind of think a lot of this stuff I look at what Prologis is doing as a precedent, you know, so if I see a Prologis proposal, they're usually sticking around 3.5 to 4%. So, I mean, I think that's about what you can get away with. I've seen some leases tied to CPI, but very rarely does that ever get agreed to. So what's the challenge now is you're just kind of having to stick with market. But for me, it's all about the deal stands on its own. And so if I'm leasing my building at the rate I want with some decent escalation in it, I'm okay with it. There's really no, and like you said, our leases are long term. You know, I'm trying to sign a 5-year lease every time I lease a building, and so there's not really much you can do. And then the real issue is you know, right now what we're seeing is people that are coming off a 5-year lease are really coming into what I like to call the shock and awe phase, because they will see what their rental increase is and their eyes about pop out of their head, because it's just insane. You know, I mean, literally double, you know, your rent literally doubles. You're running a business and you got your budget set and your rent item just doubled. So,
No, it's interesting, and for a lot of these companies, I mean, it's not as simple as just getting up and going somewhere else. And you know, if they're going somewhere else, they're more likely going to pay probably similar rates for a similar size building, and they've got, you know, infrastructure build out that would take place that could cost tens of hundreds of thousands of dollars, and lots of downtime. And so, I mean, it's just not as a matter of just getting up and moving somewhere else, even if they could.
Right.
So,
right.
Very interesting. And so, I'm going to switch gears a little bit. There's a question I always like to ask our guests. You know, you've been in the business for many years now. You've done a lot of transactions, and you know, there's always a one transaction, sometimes more than one, but you know, the one transaction that, you know, created sleepless nights, added, you know, undue stress to you and your family, you know, gave you gray hairs, whatever. It was that one deal that was just kind of an albatross. And whether you closed on it or not, you know, I know there's plenty of those that we've actually made it to the closing table, many that we just, you know, bailed out at some point just because it was too much of a headache, and the signs were, you know, the signs were written very brightly on the wall. But again, if there's one deal that comes to mind when I say all that, you know, what was it? You know, what were the challenges associated, and ultimately what was the outcome?
You know, so I did a deal, and this was a brokerage deal I did. You know, one of those deals that I created a lot of money for another company on that I referenced earlier. But I had a guy literally call me out in front of one of my signs one day, and he said, "Hey, I'm from Florida. I want to buy industrial buildings." I was like, "Okay, great." You know, so there is the Mary Kay manufacturing plant in the sub-market that I worked, and they had a 250,000 foot manufacturing plant and 136,000 square foot distribution facility. And I knew the guy that bought the plant from Mary Kay, and Mary Kay was leasing it back, and they were kind of decommissioning and getting out of that facility and moving to their new facility. And so I called the guy that bought it, and I said, "Hey man, would you sell the distribution center off? Because I don't think you need it." And he said, "Yeah." Well, he goes, "No, I want to lease it." And I said, "Okay, well, I got this guy that wants to buy something like this. I'm just going to make you an unsolicited offer." So made him an unsolicited offer, actually got it agreed to. And, you know, it's vacant. And so, and this guy, this buyer, really good dude, but man, I'll tell you what, he knew how to keep the pressure on a broker. Like, he would call me at 6 a.m. He would call me at 7 p.m. He'd call me on Saturday, on Sunday. I mean, he was like, "I'm not closing unless you find me a tenant." And I mean, he, you know, kudos to him for working as broker. He put me and my partner in a headlock and had us going. And I found him a tenant, and got him a 7-year lease. And so we're negotiating the lease while while we're under contract. And, you know, there was definitely, you know, the tenant, you know, this was all done off market. The tenant tells me, "Well, I don't have a broker. Should I get one?" I go, "If you expect me to pay them for bringing this to you," and I had actually taken this deal to their broker, who they ended up hiring, was the first guy I took the building to. He said, "Nobody for it." And I said, "You can hire whoever you want, but if they stick their hand in my pocket,
Yeah,
I'll just take this to someone else." I go, "And you'll never see an off-market opportunity for me again." And so they did. They hired their own broker. So that was a real tough conversation, you know, because, you know, tenants, you know, I guess they felt like they needed it, but I mean, they all use attorneys at some point. It's like, you want the building or not, the price isn't going to change. Your guy didn't find it, you know? So that was a real chess match I had to play with that tenant to try to keep my fee. And, because in our brokerage, the tenant rep gets 2/3 of the fee.
sure.
And so, that was pretty stressful. And then, but I mean, up until the whole time, my guy was like, "You better get this lease signed or I'm not closing." And I mean, it was just,
Jeez, you're a better man than I, especially if
yeah,
it calls at 6 a.m. and then 7 p.m. and on the weekends. Like, man. You know, the interesting thing about that is obviously you guys did a solid for them. You got the deal done. You got a tenant, but, you know, given the and you obviously made a good commission, you know, by putting it all together. But, you know, given the option, would you work with that type of client again if you knew that was how it was going to go? Was that worth the money, or was it not? I don't know the answer, but I kind of know. Like, I give you my opinion, but then again, you put a big check in front of me. It might differ, right?
Yeah, no. Don't get me wrong. The guy was always on my side, right? And I would definitely work with him again. It's just, you know, when a client calls you that much, it's just, it's like, I can't work on anything else because all you do is call me, you know?
Yeah.
And, you know, I would definitely do it again, but I think let me say this. I would just do it myself now, you know? That's where I came to. I was like, you know what? I'm sick of people telling me that they're going to like dump this fantastic deal I got them. Oh, by the way, that guy ended up selling that building to the tenant and made, you know, about what $35 a foot profit on it on 136,000 feet.
Wow.
So I just would do it myself. That's really where I'm at. I really, that's what's kind of moved me more into my sponsorship role. It's just that I want control. I don't want to be told what you're going to do. I know what I'm capable of, and I know what I'm going to do, and I'm in control of that destiny. And so I think from that perspective, I probably wouldn't do it again now, but at that point in time, if that deal comes along again, I'm doing it again. But
there you
man,
go. Yeah.
it was tough. So.
Well, awesome. Well, man, this has been a lot of fun, Jeremy. I really appreciate you coming to the show. Appreciate you, kind of, again, allowing us to pull back the curtains a little bit on your business, understand what it is you guys do. And obviously you do it incredibly well. And wishing you guys all the success in the world here over the coming, months, years, and decades as you guys continue on your trajectory there. And again, just, congrats on all the success that you had up to this point. And also for making the pivot. That's a pretty big pivot going from being just a kick-ass broker. I mean, you got obviously doing really well on the brokerage side, and making a not complete shift, but a fairly significant pivot over to the other side of the equation. So, kudos to you, buddy.
Well, thank you. I appreciate that.
Yeah. So. And appreciate you coming on the show, man. And I'll have to have you back again at some point in the future and get an update from you as you guys continue on your buying spree. And but until then, man, just keep kicking ass.
Yeah. Well, I appreciate that. So thanks for putting this podcast together and sticking with it for so long. That's awesome.
Yeah. It's been a lot of fun. I get to meet great guys like you, man. It's been a treat for the many years I've been doing it. So, but that's all we have, my friend. So again, we'll stay in touch and look forward to having you back on another show. And for all you listeners out there, just one last note I want to make mention before we close this out for the day. You guys have probably heard me state this over the last couple episodes, but I'm over in the Tampa Bay area in Florida, if you guys didn't know that. So actually Clearwater to be more specific. And, years back, I used to make myself available for anyone that might be coming into town for business or pleasure, to meet up for coffee or beer, what have you. If you're a listener of mine and you've been following me for years, I love to meet others that are passionate about the real estate space, whatever niche you're in. So if you find yourself coming to the Tampa Bay area, reach out to me. Go to my website, kevinbupp.com, and go to the contact me section and just give me some details on your travels here. And if we can get our schedules in alignment, then I would love to meet you in person while you're here in town. And so again, kevinbupp.com, contact me, give me some details on your travel, and hopefully we'll be able to hook up. And so, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.